Welcome back to another video. It's been a while. It's been over 2 weeks since my last upload. I'm glad to be back. I've just been super busy focusing on my own trading, trying to obviously scale up to larger months, helping out my mentorship students, traveling, stuff like that. I'm not some sort of YouTube guru, so I don't always post every single day to try and give you the newest strategies. I'm not doing that. So yeah, also in the meantime, we also got 5k subs, which is pretty cool. It's nothing like a million or 100,000, but 5k subs with, less than 20 videos in a 3-month span is pretty cool. So I want to thank you guys for that. Without further ado, let's get into the rest of the video. In this video, I'm going to be giving you the most elite scalping trading strategy that prop firms actually hate. Now, I'm not saying this as in they actually hate it because, well, I don't know what they think. But the point is, prop firms want you to fail challenges because that's how they make money, right? Well, this trading strategy has such a high win rate and it's so consistent, meaning you can find anywhere between 1 to 3 to up to 5 trades per session in the same hour and a half every single day. It's almost impossible for you to really fail challenges in general or not get a payout because, again, it trades with such a high win rate and it's so consistent. So you probably looked over at my chart and seen that I have a bunch of setups marked out. Again, these are all the setups that presented itself just last Friday. I'm currently recording this on Sunday, and these setups presented themselves during the same period of time on Thursday, Wednesday, Tuesday, week before that one, month before that. You get the point. These setups are so consistent that you couldn't actually tell me a day where these setups didn't present themselves. And I want you to hold me to that. At the end of this video, I want you to go back test it and come find me. Come back in the comments and tell me that you didn't find one of these setups in a single trading session. That's how consistent this model actually is. And like I mentioned, the best part about this is it all happens within the same period of time every single day. So that means you can show up for that one period of time, that same hour or an hour and a half, and know you're going to catch a trade. Before we break down anything on the chart, we obviously need to cover some rules and fundamental basis first. So before we get into the actual trade breakdown, if you want to watch me trade this model live every single day and you want to learn a little bit more about how I trade it at a 90+% win rate, obviously I don't show all the information on a YouTube video. I just give you enough because I want to keep it fair to my private side. Then you can hit the first link in the top of the description. If not, these videos are just showing you something mechanical where it should average around a 75 to 85% win rate regardless. Now let's get into the actual breakdown. So let's get into the foundation and the rules of the model. I just want to say something. This is a continuation based model. It is not a reversal model. 99% of traders probably trade a reversal model of some sort. I don't know if that statistic's actually correct, but a lot of traders in this industry try and catch the high and the low of the moves, trying to predict, but they never just react or join a simple trend because they're always trying to watch the newest ICT reversal model or anything like that, and they're just completely failing. Now, don't get me wrong. I'm not hating on ICT. I actually trade ICT, all right? Now, I'm just saying that is, the model that everyone chooses is some sort of reversal model. Why not just trade a continuation based model? Now, this is a scalping strategy and is one of my best and favorites. So we're usually in and out of the market no more than 2 minutes and upwards of 5 minutes most of the time, which is something that I prefer as a trader. I feel like it really resonates with me, and I've collected over 100, 200 premium students that obviously have resonated with them as well inside of my community, where they really like the in and out process. They don't really like swing trading or intraday trading or holding more than 15 or 30 minutes because they have that emotional control. But you really know your outcome. You either know you lose or you win when you're trading this setup, and it's really, really good, especially when you're trading with a high probability and you win more. Your confidence as a trader is obviously going to go up, and that's something that you really want as a trader. For step number 1, we're going to be finding the draw on liquidity. It can be unmitigated fair value gaps, which is anything on the 30-second up to the 5-minute, up to the 15, up to the 4-hour. It can be absolutely anything. Now, the higher the time frame, the better. See, the higher the time frame, the more range you'll have to be able to find a continuation model to that area. The lower the time frame, the less range you'll have to find to that area. The next draw on liquidity is any high time frame buy side or sell side targets. Again, 30-second up to a 5-minute, up to 15, any in between those is completely fine. The higher the time frame, the more range you'll be able to find a continuation based model, right? More, 30-second structure you better see in terms of a small uptrend, downtrend, etc. All right, lower the time frame, the lower the range. For the second step, we're going to be finding a fair value gap in the direction we want to trade. All right, so if we're looking for a trade to the upside, then we're going to find a bullish fair value gap. If we're looking for a trade to the downside, we want to find a bearish fair value gap. Ideally, you want this fair value gap to be singular, which means there's only one, or stacked is okay if you have, multiple stacked on top of each other. It's just easier to read if it is singular, but this model will indicate you what fair value gap will actually work. So regardless, it is okay anyway. For the third step, we're going to be waiting for a retracement into this fair value gap that we have obviously identified. We don't want any inversions in the process. So if it is a singular gap and obviously we're looking for a trade to the upside, we have a bullish fair value gap. You do not want a bearish candle to close below that bullish fair value gap. Now, if you have stacked gaps, you really don't want any inversions in the process as well. So again, if you're looking to trade to the upside, you have multiple bullish fair value gaps. You don't even want to see one inversion. That's going to lower the probability, right? It doesn't make it invalid. It only makes it invalid if it is a singular gap, but it lowers the probability if it is stacked gaps. For step number 4, once price has obviously come into this fair value gap and retraced into it, you're going to be marking out your most previous candle high or low. Whether it's the first one, second, third, you're always going to be marking it out until step number 5 actually hits. Now for step number 5, we're going to be waiting for the candle closure above or below this previous candle high or low that we have marked out. So like I said, whether it's the first candle that came into the gap, the second, the third, the fourth, no more than the fifth, all right, ideally, because obviously you don't want it to spend too much time in there. You want it to continue away from that fair value gap as quick as possible, right? That is going to be your entry signal. Now, there is a couple rules we have to obviously abide by so that we don't, do stupid things in the market. We're only going to be taking trades between 9:30 a.m. and 11 a.m. Eastern Standard Time. For the second rule, please do not overtrade. There's going to be 3 to 5, maybe more setups present themselves in a single session. I had 6 just from the Friday that I obviously had at the start of the video. I didn't take all those, right? I took one setup, one win, and I was done on the day. That's what being consistent is, okay? Just stick to no more than 2 trades in a single trading day. For the third step, we're going to be taking profit based on point value. And I know this sounds weird, like what do you mean, right? Aren't we finding the draw on liquidity? Aren't we targeting that? No, we're trading a continuation based model, but since we're scalping the market, we want quick in and out profits, which means we don't want to see price go, 20, 30 points into profit, which is like maybe could be $400, $500 in a profit, and then come back all the way to break even and take nothing or potentially lose, right? We're here to obviously take money and make money from the market, okay? We're looking at point values because point values have a very consistent movement. All right. So point values being 10 points. So if you're risking 10 points, this obviously comes back to step number 4 as well, which we're going to be focusing on 1-to-1 risk to rewards. It's going to be high probability. Most traders look for 1-to-6, 1-to-8, 1-to-4s. They're not consistent. You know what I mean? They're not consistent. That's what prop firms are trying to encourage you to do, is be inconsistent. You want to focus on something that is super consistent, and point values targeting those 10 points. So obviously you risk 10 to make 10. Risk 15 to make 15, risk 20 to make 20, vice versa. No more than 40, all right? 1-to-1 in 40 is as high as I go. By that point, it's not really elite scalping anymore. You're sort of holding for a longer period of time, all right? For those quick 1, 2, 3 minute trades, ideally around that 10 to 20 point mark, or maybe even 30 sometimes. So step number 5, please do not trade 5 minutes before a news event. If you're on a performance account or the funded account, it's not going to be ideal for you in terms of requesting a payout. They're going to think you're some windfall trader or gambler on a news event. We can't always predict the news, so it's just something to stay away from. So 5 minutes before a news event, stop trading. So all I'm going to be doing now is I'm going to be breaking down the trade that I caught. This was the setup, my first and only setup on the day. It lasted, we were a couple, maybe I'd say less than 10 minutes in the market open. I found my trade and I was done on the day. Yeah, very, very clean setup. Probably made, easy, close to around $12,000 copy trading on my accounts just on this simple setup. And I'll try and show you and reference it on my point values over here with my replay indicator. It's not going to be accurate to like where I got in, because obviously I get in with market orders, and TradingView just bases everything on candle closures, not real time movement. So here we go. 9:30 a.m. we're coming up. Now, like I said, for step number 1, we have to sort of find a draw on liquidity. We had all these gaps over here, so I chose this 15-minute unmitigated gap as my target. You can see we ran through most of this gap already, so it kind of told me that this wasn't the actual target and this upper one was. So that's what I was targeting there. Flicking back, you can see that we have a lot of volume to the upside, and we have in a situation where you have stacked gaps. So what I like to do is I like to try and scale up in time frame. You can see that we ended up developing a singular gap on a 3-minute. Now, I'm not taking the trade on the 3-minute. I want the 3-minute to come into here, and I'm going back on the 30-second. That's what I like to do. So if I play price out here, you can see we obviously came back into that gap right there. Now, once we came into that gap, it came into a 2-minute as well, a singular 2-minute. And we did have double gaps on the 1 minute, I believe, yeah, right here, but this upper one held. Now, this was the trade. Now, you could have taken it on the 1 minute, which is completely fine. So all you're going to do is you have that, obviously, that candle closure, right? So you have price come into the gap, which is this one right here. This is the first one that came into the fair value gap. So step number one, found our liquidity. Step number two, identified our gap. We found singular ones where the higher time frame pulled into it. We also found lower time frame ones like the 30-second and the 1 minute. Then at step number three, we're going to mark out our previous candle high or low, just like here. Wait for the retracement. Step four, we mark out our previous candle high because we're looking at a bullish gap. And all you want to see is this. You just want to see that candle closure. As soon as you see that candle closure, that lets me know that this gap is going to work. We're less likely to obviously invert that. And now we can just one-to-one risk to reward this. Now, I didn't take this on the 1 minute. I did see a few students did take it on the 1 minute. I base everything off the 30-second. So as you can see, we have a 30-second gap here. And here was our previous candle. You can see we spent a bit of time in this 30-second. That's completely fine too. But right here, we get that entry on my time frame that I was looking at. And all I did was just put my stop loss underneath here at 10 points. That was a little bit too tight, I noticed. So I extended it down, which if you have the right risk, you can obviously extend it down. So I ended up risking around 15 points on this one. Now, like I said, the goal is to one-to-one it. That's going to be super high probability. Now, the goal is to obviously just get out there. We're not trying to hold all the way to this point because, you know, sometimes price might take this high and sweep off it and reverse, right? That's a key reversal point. A lot of times just be consistent. Now, I knew that we'd at least get to that before we'd obviously get to this green line. I just want to make sure I'm targeting, you know, towards a higher time frame draw on liquidity. That way I'm, you know, trading where the price is actually going rather than trying to force a short when we haven't even got to that area. So I knew I could probably snag around 25 points on this, and so I did exactly that. And if we go up, play price, right, we hit this level. Now, in certain ways, you'll be able to obviously trail your stop loss aggressively, and we went up to 30 points, obviously given a 1-to-2. And you'll see if I had to target this level, if I play price out, we come back to break even, which again, I would have been break even probably as soon as we hit this high, right? And then obviously we come and hit stop loss. So this is why we want to focus on the clean price action, right? Look at the clean momentum up in point values. See how price went about 33 points before we even saw a bearish candle. This is why we target point values. So again, I targeted that 25 points, right? Super, super simple. That is the setup that I caught on the day. Now over here on the 15-minute time frame, we also had a unmitigated gap, and we also had a 15-minute swing low that we can target towards. We can see that we've obviously come up to that level. So now we have obviously a higher time frame motive to go down. We're delivering off that gap. But again, we don't even need to recognize that. We don't even need to predict reversals. We just want to see price continue towards a higher time frame draw on liquidity. We had that 15-minute unmitigated and that 15-minute swing low. We're going to be focusing on this one first because that is the most relevant. Okay, that's it. That's all we want. Right, so something on here, you have a 2-minute gap. You can even trade this on the 2 minute, right? And this was a setup that I didn't take, but one of the students took. You can see we came into the gap, closed below, and then obviously we can take our entry right there. All right, that's it. Step number one, find our draw on liquidity. 15-minute unmitigated gap is our first one. Second one, maybe we don't get a trade to there. Maybe we get a trade to this one. All right, we keep continuing lower, right? Obviously, 15-minute swing low. Step number two, find a fair value gap. Step number three, wait for it to retrace. Step number four, mark out your previous candle high or low. In this case, it's a bearish gap, so previous candle low. And step number five, wait for a candle closure. That is it. So we can either go for about, let's go 20 points. You can even go 20 points in this one and target 20. Let's put it at 20 and let's play price out. We hit 20 right there. And let's say maybe you could have obviously sniped and held it in terms of this obviously going down and grabbed 37 points, trailing your risk like this. Imagine this is your stop loss. Real time, you're just trailing it down as the candle is moving in real time. You can do that. Or maybe you are trying to hold it if you have the right data and try and get around 56 points, right? All this is doing, right? All we want to focus on is obviously grabbing that 1-to-1. It's super high probability. If you choose to hold, you know, I can't guarantee its success if you have like no data, no market experience, no intuition on it. Obviously, I can hold trades for longer periods of time, but for something that's super consistent with prop firms, this is going to be a perfect strategy. So that is it for the end of the video. If you want to watch me trade this model live, and obviously you want to learn a little bit more about the strategy, I have an entire course on breaking it down from literally A to Z, more than obviously I do on YouTube because I want to keep it fair to my private side. You can join in the first link, top of the description. If not, I have plenty of students that aren't in the premium community completely rinsing off the YouTube videos, and I have a ton of free YouTube videos breaking down this exact model on my channel. So if you want to go check those out, you can check those out as well. If you got any value from this video, maybe you liked it, maybe you liked the strategy, you liked the concept, or maybe you back tested it and like I said, you're holding me to it, you couldn't find a trade in a single day during that period of time, let me know in the comments. And thank you all for watching. Thanks for 5K subs, and I'll see you in the next video.